Hey everyone, welcome back to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrading.com. And if you have been with us for a while, you know we don't just talk about stocks. We talk about companies that have earnings, and specifically earnings, and how to make money from trading those earnings announcements. All right, so this week, the week of August 18th, 2025, it features the retail bellwethers. We have a lot of retailers declaring earnings, and this is a pivotal week for trade and consumer spending viewpoint. So, how is our tariffs, et cetera, affecting spending habits, and how are these retailers handling that? So, Home Depot and Walmart are just two of the big names that declare this week. So, we're going to go through the list and also take a look at potential candidates, as well as a trade update from last week and a new trade alert for this week, all coming up in just a moment. Here we go. All right, don't forget that you can use the chapter feature at the bottom of this video to take a look at any stock that we talk about and review it. We touch on them just briefly. Here's the list this week, and what's unique about this week is that we have only 189 companies declaring earnings this week, of which we are only watching 37. And I will send trade alerts out for the most volatile stocks and for the most quiet stocks to our subscribers, okay, to those that sign up for our Delta Neutral Breakout or our Delta Neutral Income publications. And you can see here on the list, on the left are these more volatile stocks, and on the right are the what we call quiet stocks. And for quiet stocks, we look at stocks that move less than 10% through their earnings. And I'll show you an example of one of these. This is going to be Pfizer. That is an example of a stock that is consistently quiet through earnings. Okay, it has an average move of about 4% through the earnings cycle. And you can see that here I have the earnings highlighted with the ellipses, and the stock just doesn't move. This is ideal for selling option premium through earnings, and we do this in a managed risk averse way using an Iron Condor. Okay, so we don't sell naked options here. We use strategies such as vertical spreads, or we combine vertical spreads into what's called an Iron Condor and take advantage of these quiet moves. Okay, so let's go jump back to the list that you saw, and really it is highlighted by Home Depot, Toll Brothers. You can see TJ Maxx, Lowe's, Ross stores, Walmart. You know, a lot of the big retailers coming up. So let's go ahead and jump to the charts, and we'll start going through these because we start today, okay, with Palo Alto Networks. Now, this stock does have anything above, I would say, 7% to 7 to 9% is on that upward end of what we call quiet. Okay, we really don't look at stocks being too volatile until they get into the double-digit average through their moves. And here on Palo Alto Networks, this is an ideal stock for selling premium around earnings because it's a nice expensive stock. It's $175, and it just doesn't move very much. In fact, I believe this last earnings announcement, this gap down is just a 4% move, I believe, and just not well within the average move range. And so it is easily to go out of the money, selling premium above and below the price of the stock, and then hedging that with buying options even further away. Okay, so if you don't know what an Iron Condor is, you can go to ewotrader.com and look at some of our education. And we talk about Iron Condors and how they work each and every week. Okay, so this is Palo Alto Networks. They declare today after market close, so that's Monday, August 18th after market close, and the average move here is 7% for Palo Alto Networks. Okay. Now, one of the bellwethers that we're all looking at is going to be Home Depot. Okay, now they declare tomorrow morning on Tuesday, August 19th, before market open, And you can see here that Home Depot has been in a bit of an uptrend, but we're not so focused with a intermediate or long-term trend of a stock. We are only concerned with how it moves after the earnings announcement and what happens directly after that. Because one thing is consistent, implied volatility rises before the earnings, and this happens on all stocks that have options. Implied volatility rushes into the options, and then after the announcement, after the earnings call, after the CEO gives their outlook for future potential earnings, the IV drops. It crushes. That's called IV crush. And that's what we expect to occur here again. Home Depot, believe it or not, has an average move of just 3% around earnings. Okay. So they do declare tomorrow morning. This is another great stock to do a selling strategy, such as an Iron Condor, because it's a $400 stock. Okay. An example of one that's not is honestly Pfizer. It's getting a little difficult to sell on Pfizer because um, it is a low dollar. It's only $22, and it's hard to get out of the money with any options that have any value to them. And a side note here, Pfizer, that I gave you an example of earlier, they do not have earnings this week. They had earnings a couple of weeks ago, and that was just an example. But here's another example. Obviously, Home Depot, and they are going to move maybe more, maybe less, but the average is 3%. That's all that they move. Now, Medtronic, they're another one that moves nice and quiet. And believe it or not, a name that sounds like they might be volatile isn't. Okay. Medtronic will declare tomorrow morning as well. That's going to be Tuesday, August 19th, before market open. The average move for Medtronic after the earnings announcement is just 4%. All right. This is a $92 stock. Again, anything really $50 and above are great for Iron Condors. And this is a stock that's been in a nice little uptrend. It is consolidating going into earnings. So we might have a little volatility there. But again, the average move is about 4%. In fact, this last earnings announcement here, this is just a 4.5% move on that day. Now, the following day, it did drop a little bit more. Okay. But we're not, we usually capture that premium and we're out of the trade pretty quickly. All right. Now, another bellwether that everyone's going to be looking at is Toll Brothers. Okay. Now, this is a home builder. They are actually on an upper end of the scale when it comes to home building, meaning they build custom homes. So they are a little pricier, and very nice little trend since April here for Toll Brothers. They will declare tomorrow on Tuesday, August 19th, after market close. The average move here is 7%. Now, a unique thing about Toll Brothers is they could be potentially be impacted by what's going to happen this week with the Fed. Now, there's no formal Fed announcement this week, but they are at Jackson Hole, Wyoming, and they will be speaking this week and talking about whatever the Fed talks about these days. Okay. And so the home builders could be impacted by that. Toll Brothers, again, is one of those that could be definitely impacted here. Okay, continuing on through our list, we have TJ Maxx. So here is a bellwether retailer that is always on our list. They declare on Wednesday, August 20th, before market open. That's that BMO there. Before market open, the average move is about 6%. And I looked it up before our show, and I did see that the option market makers were pricing in a move of about 6% for TJ Maxx. Now, this is a $130 stock. Again, another one that's ideal for selling premium going into the earnings, given that it is a quiet stock that only moves single digits, just does not move very much. Now, they might move a little bit more because of potential for tariff implications if they import a large amount of their product from overseas. But, so far, a lot of people have been, a lot of the talking heads specifically have been pretty surprised that tariffs have not impacted the economy as negatively as anticipated. All right. So continuing on through the list, Analog Devices used to be a big mover, but no longer. This is a stock that has gone from $160 back in April, currently trading at $231. This one is somewhat volatile. However, through the earnings announcements, not so much. All right. Analog Devices will declare Wednesday, August 20th, before market open, and the average move here is just 6%. So another ideal stock at $230 to look and see if that trade is available. So with an average move of 6%, I might try to sell options 8%, 9 or 10% out of the money if there's any decent premium there, and then protect that with buying an option even further out of the money to reduce my risk. All right. So that's how we do that. And we do it on the top and the bottom. We do call spreads on the top. We sell put spreads on the bottom, and you combine that together, and that is your Iron Condor. All right, getting through the rest of our list. Now, Lowe's has caught a bit of what we call catching a bid here, where it was kind of trading sideways until the end of July or mid-July, and then this stock just took off. But we're not so focused about the intermediate or longer-term trend of the stock. We're focused just on the earnings announcement. They will declare on Wednesday, August 20th, before market open. Another one before market open on Wednesday. And the average move here on Lowe's, just like Home Depot, nice and quiet. Lowe's average move is just 4% through earnings. Okay. So another great stock to trade because it's a $250 stock. And we look for another good opportunity there with a stock that declares midweek this week. So plenty of time to set up a trade and review it. So just two more here on the quiet list that I'd like to review with you here. All right, we have Ross Stores. They will declare on Thursday, August 21st, after market close, and the expected move here is 8%. So Ross Stores has been historically a little bit more volatile than many other retailers around earnings. In fact, this earnings announcement back here, this is a 9% move. Okay. So even though the average is around 8%, it could be above or below. If we go back even further, I don't know if I have. Yeah, I do have. This is maybe a 1% move. Yes, it opened up lower, but look where it closed. It closed at the end of the day, just up slightly, maybe even less than 1%. That is the average, kind of move for the stock. So between the last two earnings announcement, the average move is 4.5%. Okay. So here, the option market makers are positioning in an 8% move with $146 stock. I don't think you could do a straddle or strangle with this and try to, with a debit that's about 5% of the stock prices, which is what you would need for a straddle or strangle. That's why we would sell an Iron Condor on this, or maybe even a vertical put spread. Okay. And not do the call spread on top. And there's some reasons for that. But Ross Stores, again, quieter stock, only 8% on the potential move. And then all eyes will be on Walmart. Okay. Walmart will be declaring Thursday, August 21st, actually before market open. Okay. So Thursday morning, they have an average move of 6%. And as you can see, the last earnings announcement, just look at that move. Just not much of a move at all. This is such a huge company that it's really hard to move the needle as far as creating stock volatility after an earnings announcement. Okay. So being $100 stock, another great opportunity to sell premium going into the earnings announcement. Okay. Now, so that's it for our list. Let's jump over and take a look at the stocks that are often really fun to trade, okay, around earnings. Now, the breakout candidates, let me show you an example of what a breakout candidate looks like. Okay, this is Akamai. Again, they do not have earnings this week. This is just an example of a stock. Akamai actually had earnings at the beginning of August, okay, and around Friday the 8th, I believe. But you can see historically the big moves around Akamai. That's what it looks like on a chart. Okay. That's a volatile stock around earnings. All right. So what we do with stocks like this is that we buy straddles or strangles. Okay. So we buy the call, we buy the put. Straddles are done at the same strike price. Strangles are done at by a call at a higher strike price, by a put at a lower strike price. That is a strangle. And we kind of choose based upon what's giving us the best pricing. Okay, that would be an example of how to do one of those two strategies. Yes, implied volatility is usually more expensive. Okay, and it goes against the common thinking of when to apply a straddle or strangle. But if you always buy straddles and strangles in a low implied volatility environment, remember you get what you pay for. Okay. So with these, let's take a look at the list for this week because it really begins today. Now, many of the stocks are might be unfamiliar to you. They're obviously the familiar names like Target, Estée, Lauder, etc. Intuit's on there, Workday's on there. But we start today with Fabrinet. Okay, not really a popular name, but if we go over and look at the chart, Fabrinet moves an average of 12% through earnings. Okay. Now, the problem is this is a $300 stock. So a straddle or strangle is going to be kind of expensive here, meaning cost over $1,000 for that trade. And unless you can get a straddle or strangle that is under 10% of that stock price, so under $32, or well, it's $327. Okay. 10% of that is going to be $32. That's how much the straddle or strangle would be. Because remember, you got to multiply that times 100. So you're looking at $3,200 for a straddle, maybe $2,800 or so for a strangle. And you've got to get that at under 10% of that stock price for a stock that only moves an average of 12%. You can see this nice move. This stock has rallied from 175 to 327 since April. Okay, so this stock has really caught a bid and is trading just off its highs now at 327. But again, tonight we're expecting a double-digit move. But again, I would be very careful. In fact, this week, okay, here's a bit of information, inside information that I usually only provide for our subscribers to our publications. Okay, but I'll give it to you here. Okay, I'd be very careful this week with any volatile stock, meaning buying a straddle or strangle comes with additional risk this week just because many companies are still haven't figured out how tariffs are going to impact them over the long term, and the stocks just aren't moving very much. Okay, so Fabrinet could be one of those. We'll see. All right, jumping ahead to the middle of the week. I did want to include this stock. This is a GDS Holdings. Okay. This is an international company, and they will have earnings on Wednesday, August 20th, before market open. But the average move here is 18%. Okay. Now, this is a $32 stock. This one would be ideal, okay, for a straddle or strangle. All right. Because 10% of 32 is going to be $3.20. All right. So that would be $320 for a straddle if you can get that price. So if I can get that price around that 10% number for this, that might be a good opportunity there. But you can see the last earnings announcement, this stock just did not move very much. That's the risk. That's what we've been seeing right now in this current environment. Now, prior to that, okay, I don't have it marked on GDS here, but the prior earnings announcement to that was back on March 19th. Okay. And March 19th, right there. Okay. This gap right there. Let me just put a little mark on that. All right. So 19th right there. And you can see the stock had gapped down considerably since the previous day. And that is what you're looking for on a stock that has an average move of 18%. Okay. Now let's get into some of the names that you might want to watch. Okay. So Target, obviously a big retailer. They're going to have earnings on Wednesday, August 20th, before market open. So Wednesday morning, the average move here is around 12%. And with the current market environment, they might have some volatility. Right now, options are being priced in a little bit more than 12%, but I would be really careful with this as historically, here's another one. Look at this. The expected move back in March was greater than 14%, and the stock just didn't. It dropped a little bit, and it did fall down. But again, the average move around earnings, as you can see, is decreasing for Target. The average move, and which we're seeing across the board with a lot of these stocks. So the average right now, going back 2 years worth of earning cycles, right now is about 12%. And but again, is Target able to price in what importing some of their goods and products are going to? Is that going to positively or negatively impact the company? Okay, and we'll see with their results this week. Okay, so that's before market open on Wednesday. Now let's talk about Estée Lauder. Okay, this is an old favorite of ours that was a consistent winner for a long time. Now, it's amazing. You can see the stock got down to $50. 2 years ago, this was a $400 stock. Okay, 2 years ago, this was a $400 stock, and it has just gotten the what kicked out of it. You can see that occasionally this is an earnings announcement right there. Right here is an earnings announcement. Okay, you can see this big candle here. That's an earnings announcement. So this stock, okay, that's an earnings announcement right there. Okay, so this stock historically is a big mover. That's an earnings announcement right there. However, it has fallen off. If I bring this up and bring it current, okay, this 12% move is really a lot less than it used to be. However, I do like the pattern here. Okay, and Estée Lauder, are they coming back? I mean, they've risen in price from around the $50 level back here in April. They've almost doubled. They're currently at $91. Could we pop up over? Could we make a $10 move and get up over 100 on this earnings announcement? I don't know, but same story here. It's all about the pricing of the straddle or strangle. You've got to get that below the average move, and sometimes it's available, sometimes it's not. Okay, so the average move here is just 12%. Again, Estée Lauder, Wednesday morning before market open, definitely one to watch. Also one to watch is Workday. Now this is a $220 stock. Again, this will be a little bit more expensive to trade, probably around $3,000 for the straddle or strangle. Okay, but they do move around 12%. Okay, and I'm not going to get on that soapbox again. I've talked about it now twice about getting that buy price to about 10% of the stock price, if possible. All right, so Workday is going to move. You can see the last earnings event, the stock dropped quite a bit there on that earnings date. That drop was 12%, actually, right at the average move. And that's the problem. Yes, it moved 12% on this last earnings announcement, but if option market makers were pricing in a 14% move, you would have had a losing trade because you're paying for a 14% move. You only got 12. All right. That's one of the challenges with doing this. And that's why utilizing a longtime pro like myself is one of the advantages of doing this strategy around earnings. All right. So continue on. We got two more to look at. Intuit, believe it or not, is a $700 stock. All right. Now, and they only move an average of 10% through earnings. Okay. Now, but you are going to want to watch them. They declare Thursday, August 21st after market close. All right. So believe it or not, there's a little bit of lull in the action on Wednesday night. Okay. Now, there are some stocks that will declare Wednesday after market close, but none that are on our list. Okay. So we jump all the way to Thursday night when Intuit declares earnings, and an average move here of just around 10%. Okay. And that's it. And on a $700 stock, honestly, I would just sit back and watch it. Okay. Sit back and watch. And, right now they've rolled over. They were an $800 stock, and, they lost $100 pretty quick. Okay. And could they lose more? Could they lose another 100 through earnings? That maybe it's another Estee Lauder and goes from 800 to 50. I don't know. Okay. But it didn't do that overnight. It did that over time for Estee Lauder. And the same thing could happen here on Intuit. So it is definitely one we want to watch. All right. We close out the week, and we're going to close out this session here before I get to the trades with BJ's Wholesale Club. All right. Now, this was once definitely a double-digit mover. It still has an average of about 10%. And you can see here, the big candles on earnings date. Last earnings, it had a volatile day. Previous earnings to that, it moved about its average, especially the day after. So a big candle on the day of earnings, a big candle afterwards. That was a profitable trade for a Straddle or Strangle. This was not. Okay. That's why I say be very careful. Okay. Especially when stocks go from being, 15% averages, 18% averages, and all of a sudden they've come down and they're starting to get down to those single digits. That just means the stock historically just hasn't been moving very much. Okay. So, but BJ's declares Friday morning before market open, and we finish out the week with this retailer declaring earnings on Friday. All right. So that's our list for this week. I'll throw the complete list up again. And again, on the left-hand side, we have the more volatile stocks. On the right-hand side are those stocks that the market, okay, and the market makers, and their historical performance indicates they might be just single-digit movers. Okay, so it's not our opinion. It's what the market makers are pricing in and what the average is historically for these stocks. So again, Toll Brothers, Home Depot, Lowe's, TJ Maxx, Ross Stores, Walmart, always right now pretty much single-digit movers for those. All right. So each week, as you know, I do give out a trade alert, and I do review the previous week's trade alerts or update you on open positions. And I got one for you this week as well. All right. So, but we're going to start with last week's trade. Okay. And last week's trade, as we go to that, was on Brinker International. Okay. Brinker International, the symbol is EAT. So EAT. That gives you some idea what Brinker International does. They own a variety of restaurant chains. Okay. And we were looking for another big mover because Brinker usually moves double digits around earnings. All right. So how did the trade do? All right. Well, interestingly enough, the stock popped up to and traded as high as the upper break even in the trade. So we were sitting on that, and then the minute the stock rolls over is when we would want to exit. Okay, when the stock rallies up and then starts to pull back, well, you don't want to wait too long. And we did exit with a slight loss in the trade. So based upon the debit in the trade, we were just down 8% overall, which was a loss of $105. So not much damage done. If you recall, we made over $800 the previous week in the previous week's trade. So we just kind of ate into a little bit of that profit, but not bad at all. And considering it was a losing trade. So we just take that, exit out real quick, and then move on, saving our capital for the next opportunity. So what do we have for you this week? Well, we are focused on the retailers as well. And we are focused on one of those that has consistent single-digit results, and that's TJ Maxx. All right, the risk graph here, if you focus on the black line of the risk graph, which is on the right, okay, so the stock chart obviously is on the left. Risk graph of the option trade is on the right. The black line, every time the line changes directions, okay, so it changes directions 4 times, those are strike prices where we either bought or sold options. All right. So I know that, I know what strike price is just by looking at the risk graph there. Right. So, what we'll do here is sell the Iron Condor going into the earnings announcement. And we're going to try to take in, about $115. And the trade width here is $5 wide. So our risk is in the trade is going to be $5 minus the credit amount. So if our credit is $1.15, that means our risk in the trade will be $3.85. All right. So that would be $1.15 or $115 is the approximate credit at the time that we are entering this. And we are looking to for the stock to stay. If you notice the light blue lines there, the horizontal light blue lines, those are the break evens. So one on top, one on bottom. We just want the stock to stay within those break evens. So 140 on the top and about 128 on the bottom, maybe 127 or so, it looks like, on the bottom. And I just want it to stay in that range, and we will have a nice, profitable trade. All right. So that is our show for this week. I appreciate each and every one of you. We have a link for a free guide here on the screen. So take advantage of that. And I just want everybody to, knowledge is your best friend. And if you just increase your knowledge, keep trading, you keep building your financial future, you will have success in this business. So everyone have a great trading week, and I will see you next week. Take care.